What up, everybody? Welcome to another class full of gems here at SMC. So today we got a whole lot to talk about. As you see here, we're going to talk about entering on momentum moves with low risk, because you know momentum can be scary. Price dropping fast, price rising fast. So you're like, where do I get in? I'm going to talk about how to get in with low risk, entering cleanly on pullbacks in key areas. We're going to identify the key areas in the market where you want to get in at a lower high or maybe even a higher low for a bullish move, exiting plays at the top or the bottom of a move, how to trade trendy weeks like last week. Last week was fire. Anticipating chop before the chop occurs, not after you blow your account. And also, how could we have risked 16 points to make over 1,700 within the past week or two? I'm gonna break that down. And then I do at the beginning of class. At the beginning of class, I want to break down the fair value gaps and liquidity for the people that's new and let them know kind of like why I personally stay away from support and resistance. That doesn't mean there's not profitable traders that trade it, but I'm gonna just tell you my philosophy on it. That's all. And then of course, y'all know we're gonna reveal the chart debate. Everybody relax, relax. And then of course you got the weekly watch list at the end. So with that being said, let's really get right into it, y'all. Let me delete this. And let's talk about last week. So actually, I'm sorry. We're supposed to go to the fair value. Let's explain the fair value gap real quick for the good people. For the good people. So a fair value gap, people, you need 3 consecutive candles. Any 3 consecutive candles. I'm talking about I could choose this red doji, the green one, and the green doji, or I could choose the green doji, the red big bearish candle, and the next red candle. I could choose any 3 consecutive candles. The thing is, I don't want you to just know what it looked like. I want you to understand it conceptually, what is actually going on. So hear me out. The thing is, the market has a strong objective of bringing balance, bringing efficiency to inefficiencies. So it's a zero-sum game. For every buyer, there needs to be a seller. And for every seller, there needs to be a buyer. For every winner, there's a loser. For every loser, there's a winner. That's how the market works. And it tries to provide that fairness, wink, wink, that fairness at all times. So if you have an area that's only representative of one type of trader, that's unfair, that's inefficient. So it tries to clean that up. But let's really break it down even more. So look, y'all see by the way, I'm gonna use these 3 candles right here: the green, the big red, and the medium red. All right. So let's look at the green at the top right quick. So if I ask you about this wick, I'm gonna circle it for y'all. Whoopsies. I'm gonna circle it for y'all right here. You see this green wick. If I ask you who is represented in it, you would probably tell me, oh, well, that represents buyers, because at first it was a red candle, and then buyers brought it back up and made it a green wick. And that's fine. There's nothing wrong with you saying. So, but what you just told me is that buyers and sellers are represented in this one little area right here. All right, that's cute and all. But you just told me that that's a fair area because buyers and sellers had a chance. So we chilling. Let's move down. Boom, boom, boom. All right, let's look at it. Look at the third candle, this third wick right here. The third candle's wick. My fault. The third candle's wick. See, if I ask you the same question, you're gonna tell me the same thing. That's buyers and sellers. That's why it's a wick, my people. That's why it's a wick. But here's a thing. Here's a thing. There's a section right in the middle here, which is the red body that is strictly sellers. That's why it's a red body. It's strictly sellers. So if it's strictly sellers, is that fair? Like, to me, that don't seem fair. Like, there's actually a gap in fairness right now. There's a gap in fairness. You know what we should call it, y'all? We should call it a fair value gap, since it's a gap in fairness. I don't know what y'all think. Sound like a good name? And that's what we do. We identify those gaps in fairness where it's just strictly one type of trader represented in the area. So that's what this is. And price has an objective of coming back to the area to bring buyers to the area. So here's the thing. When you learn about fair value gaps from other people that's misinformed, they're gonna tell you to short every red one, and they're gonna tell you to buy every green one. But the thing is, that's gonna get you clapped. I'm gonna be real, yo. You go below 15 accounts per day doing that. You gotta know which ones are important, because what you're gonna realize is these inefficiencies, that's what we call their inefficiencies. These inefficient parts of price action are all over your chart. All right, they all over your chart. I'm trying to get creative for y'all, but yeah, they all over y'all chart. So like, I don't want you to get caught up. There's deeper understanding and teachings on fair value gaps that I can't get into right now, but I want to at least let y'all know what it look like and understand why they're important. It's because they're inefficient. Now, what I want y'all to remember is this though, is this. You see, gaps. Everybody learns about gaps when they first start trading. Y'all learn about gaps when price gaps up and gaps down and it leaves like a space on the chart. Those spaces, how many times have you been going for like a gap fill, and then next thing you know, that space and price action doesn't actually get filled. It like touches it and goes the other way. You're like, what the heck? Like, I thought we were gonna fill the gap. My mentor told me that all gaps get filled. Like, I don't understand. And listen, I'm not saying nothing about your mentor, but your mentor needs to understand context, my people, context. All gaps don't get filled right now. That's the key that they got to start saying. All gaps don't get filled right now. So sometimes gaps get rejected on. Yo, you know what's crazy? Sometimes fair value gaps get rejected on. Wow, that's crazy. Fair value gaps get rejected on too. Oh, and sometimes fair value gaps get filled. Those be the ones that don't work. But what you got to realize is they're both inefficiencies and they're both either getting filled or rejected on / bounced on. And so how do you know what's going to happen on which? That's the deeper understanding that I ain't gonna lie. The link is in the description. If you watch this on YouTube, join the mentorship so we can get into the real source behind fair value gaps and which ones are the highly probable ones versus the low probable ones. But at the end of the day, at least y'all should know, don't go crazy on fair value gaps trying to short everyone and try to buy up every green one. I don't want y'all to get killed. Understand that. But yeah, now you know what it looked like. Now, here's the tank. Let's get into liquidity for a second. Now y'all know what fair value gaps look like, okay? So when I talk about it for the rest of the class, don't say I didn't teach you what it looked like. And then quickly, liquidity. Liquidity is pretty easy. Just think of it like this. Like these market makers, they're dirty. You know, we don't like market makers. That's our ops. That's our enemies. They don't want to see us win. We don't want to see them win. You feel what I'm saying? But I ain't gonna lie, they got more money than us and they got more control than us. So I'm not really rocking with y'all like that. I'm rocking with the market makers. I'm gonna trade with them. Y'all could do the whole protest stuff. I'm gonna rock with the market makers. I'm with the ops. I ain't gonna lie, because they make the best moves in the market. And see, what they go for is they go for liquidity. So all the places where you tend to put your stop losses, that's what they go to target. So they target areas where there's pools of stop losses. You feel what I'm saying? So if you see an area where there's obvious stop losses, that's what we'll see as liquidity. So when you get into any type of trading, I don't care what strategy you choose. Let's say we shorted right here. Let's say we shorted right here. Boom. You know what most people put their stop loss? On top of this high. It makes the most sense, right? At the swing high, that makes sense. Everybody say that. All right, cool. Well, you're not the only one. Everybody's stop loss is right here. So when order flow flips bullish, guess what's going to be targeted? Them stop losses. So for me, I know how to peep. I know how to recognize. I'm going to say peep. I know how to recognize a order flow shift. I know how to recognize it. And so since I know how to recognize order flow shifts very early, I don't need a market structure shift. I know a lot of people do break a structure, change of character, but personally, I get in plays way quicker than that. So I know how to recognize order flow shifts really quickly and know when they're going for this liquidity up here versus this liquidity down here. Because guess what? It was liquidity at these lows as well. And so here's the thing, right? Order flow was bearish last week. Well, I'm on replay right now. Don't worry, my charts are never this busy. All these lines you see, we'll be talking about them a little bit later in class, and they will get erased because they're only for demonstrations. My charts are never busy. But as y'all can see, like last week, we ended up coming all the way down here and stuff. So order flow was clearly bearish. And so you see all these lower highs that you see. There's a whole pool of liquidity up here because everybody that's been shorting the move has their stop losses on top of these highs. All right, now with that being said, why did they not get targeted? That's because we were going for liquidity on the sell side. So guess who got tagged? These lows, these lows, these lows. And then we came into the lowest body here. We'll talk about that a little bit later. But when order flow is bearish, we go for liquidity on the downside. When order flow is bullish, we go for liquidity where? On the upside, right? On the upside. When order flow is bullish. So dang, how do I know if order flow is bullish or bearish? Tap in with me. We're going to talk really deeply about that because that's the core of everything I do, understanding what the market is targeting. And so, for example, if you've been following me for a while, you know I do chart debates every single weekend. And my mentees, obviously, they learn from me. My mentees get my chart debates right pretty much every week. Like, it's very rare that you're going to see them get it wrong. And it's not like it's usually, let's say I got 35 mentees, right? It's not like it's usually like, freaking 2015. Like, no, it's gonna be like 30 to 5. Like 30 people got it right, 5 people got it wrong. Sometimes all 35 will get it right. I really don't remember how many mentees I have. That's just a random number, but yeah. So that's my point. So what I say I say that for a reason. Just to let y'all know, you can know where the market is going ahead of time by looking at a naked chart, no indicators, no none of that. And so if you know where the market is going, you know what liquidity is being targeted, and all you have to do is find a good entry strategy, and you have to know how to hold trades, which is some of the stuff we'll be talking about today. But liquidity, once again, exists at highs and lows, and a good place for liquidity is what? Support and resistance levels. Oh man, so here's that other part of class I said I was going to talk about briefly was why I don't trade support and resistance. Because I know that these market makers go for liquidity or support and resistance levels. Why would I trade support and resistance versus just learning order flow? Because when we take liquidity, we take it aggressively. So look, you see this fire candle right here, these fire like 2-3 candles. The red side, what you think they was going for? This support level, that quote unquote Zeman zone. So what I would do is understand how to recognize this, and then I would take advantage of that. And guess what? I did take advantage of that. And we traded this live. I traded this live with the team. I remember this. This is from Thursday, February 20th. So we learned how to take advantage of this, like order flow shifts, and we plummet through these support levels. So the support levels, they tell you, hey, 2-touch rule. That's cool. But the best moves come when they're taking the stop losses. That's the best moves in the market. So if I think about what's the smoothest moves, the ones that don't give me a headache and a heart attack as they move. I don't like moves that zigzag and it's taking forever. No, I like the moves that like go a straight line. Them be the ones. Them be the ones like these. You know what I'm saying? Like these. Them the ones. Yeah, I think we all like those type of moves. Those are the moves that we use when we going for liquidity. And that's why I trade for liquidity, not support and resistance. I learn when they're attacking support and resistance levels. All right. All right. Now in the chat, chill over in the chat. But in the chat, Eric says that's why your market structure quiz was so essential, because of the internally/externally bullish or bearish based on the internal/external liquidity. So you're recognizing those changes in order flow early, keeps you on the right side of the internal and external debates or where price is going. Right. So what I'm getting from Eric's statement is, Jessica said, explain liquidity. I just explained liquidity, Jessica. I just explained liquidity. Liquidity, man. Liquidity is where the pools of stop losses are. Just think of it like that. Where do you think the pools of stop losses are in the market? That is liquidity. So you'll realize that there's liquidity on the downside. There's also liquidity on the upside. And so it's like, which one is price going for? If you learn order flow, you'll know which one is being targeted right now. All right. So that's liquidity right now. Where are the pools of stop losses? And so, kind of like to what Eric was saying, like, yeah, I don't use market structure because I understand how to recognize order flow shifts early. Like, I don't need a change of character to know that we bearish, which is perfect because it actually is yo, Eric, thank you so much for that. I got the illest segue. Watch, because this is the next thing I want to cover in class is how we could have risked 16 points to make 1,700, and we didn't need no market structure shift for that. So everybody clapping up for Eric. Thank you, Eric, for the perfect segue. I needed that. Look at this. Look at this. Look at this. So let me tell y'all how we could have risked 16 points to make 1,700 on the NAS. And let's actually take it back to right here. So look. This is a Friday candle. Once again, please ignore the yellow lines. Once again, my charts are never this busy. I should know that. We're going to get to everything over there. All right, so I had a class when price looked just like this. This green candle is a Friday candle. My classes are what? Sundays. Okay. So I say, yo, everybody, if the NASDAQ is going to go for all-time highs, we need NASDAQ to go straight to them all-time highs right now. We do not want NASDAQ to come back into this bullish fair value gap. If it comes back to this bullish fair value gap, it's not really a good sign. But you know what? I'm cool with price using the upper half of this fair value gap, maybe as the most emergency type of bullish sentiment, the upper half of it, and that's it. If we come to the lower half, I'm bearish. Go back and record it. That's what I said. So we have basically our bullish plan is go up immediately. That's the favorable one. Emergency is upper half. All right, boom. So what ends up happening that week is, and like I said, we ended up shorting down in the hair at a point. Those are those shorts. Remember I said we took that support level because that's the liquidity. We took that, we shorted into it. When I seen price bounce here and I got it at the exact bottom, right here. Price ran. I'm like, ah, dang, all right. Strong little balance. I can't front. Like maybe my emergency plan is gonna play out, but it's really contingent upon one thing. Whoopsie, spoiler alert. It's really contingent upon one thing. Look, show y'all something, man. Show y'all something, man. See y'all right now. Because this is the next day, by the way. This is Friday. This is Friday morning. I put this in the chat. I say, yo, I'm bullish on NASDAQ if we hold the upper half of this hourly bullish fair value gap. So notice I'm not talking about I'm bullish on NASDAQ as long as we don't change character by coming under these lows or change character internally by coming under these lows or whatever the heck is going. I don't care about none of that, bro. I already know the only thing that could hold NASDAQ bullish is the upper half of this blue area, which is what? A bullish fair value gap. So for the people who just learn fair value gaps, welcome home. Yeah, tell you a lot when you learn it in a real way. So you see the upper half of this is what we want to hold. And guess what? This goes from about 206 to 190. That's 16 points, my people, in case your math is a little bit off. If y'all don't know, I used to teach math for high school. I'm saying, so I got a little math brain in me. That's 16 points. So what I'm saying is 16 points will tell you everything you need to know about price action, because when I say we're bears, I'm not just like on some like we're gonna go down, but I don't know where. So, yo, if we're moving impulsively, like I'm gonna just take profits because I'm up $500. Oh my gosh, I'm nervous. No, I know where we're going. So if we lose the upper half, automatically, I know we're gonna run these lows off the rip. So I'm already bearish from up here, while most people are like, I think we're bullish. Price is gonna bounce. All right, boom. We coming down here next. And everything that I told you about is said beforehand, mind you. So the proof is in the pudding. It's all said beforehand, not after the fact. That's the slogan at BTSMC is we call it before it happens here. That's the slogan at this program. We call it before it happens, not reacting. We don't react. We can predict. Yeah. So anywho, when we run these lows, where are we going? So I want y'all to peep this. Watch out, Mike. Somebody came off mute. Watch out, Mike. Somebody off mute. Watch out, Mike. Hold on. Come on, man. Come on, y'all killing me. Mute. Come on, man. Y'all killing me. Y'all killing me early. All right, boom. So what was I saying? What did I tell you guys about the daily outlook? And this is why you need to frame all your trades from the higher time frame, because on the daily side of things, I already told y'all from the beginning of the week, we don't want to use the blue area, but if we do, it has to be upper half. So if you know on the hourly chart, the minute we fail this blue area, the upper half of it, we're gonna run these lows. Guess what that does? Automatically, it puts you on the lower half. But I already told you we're not supposed to be on the lower half in the first place. So why did I say that on the daily? Because I understand on the daily, if we don't use the upper half of this daily fair value gap, because I zoomed out now, we're coming to run all these lows. You feel what I'm saying? So like I said, the drop that we experienced last week, all of that was 1,700. From up here to the drop last week is 1,700 points worth of NASDAQ. And this is what I mean by you could predict price. And if you don't believe me, y'all don't believe me, right? Go back in the recordings. People who build me know I already from up here was telling y'all I got NASDAQ coming into these downside targets. We hit all of our downside targets last week. The classes are on Sundays. It's before the week starts. I already said NASDAQ coming all the way down here. So when we see it play out throughout the week, how could you be surprised? Or how could you say, man, is it lucky guess? Like, no, I knew we was bearish since up here. So I got all of these downside projections, and I did swing, and I showed y'all screenshots of my swing trades and all of that to the downside. So I'm just saying, like, you know, with simple understandings about order flow, fair value gaps, you could get some really favorable plays in the market, like if you know what to look for. So yeah, you might not understand every single thing I'm talking about, but I want you to at least understand the potential of the information. And it lets you know, like, okay, trading could be a little bit easier if I get a few more key concepts in my brain. And so, yeah, man, we watched it all play out, man. It got real nasty last week. All right, and then that brings us to, oh, actually, I wanted to say one other thing. My fault, y'all. One other thing real quick. Actually, I might use a different ticker for this. Hold on. Let's use NQH. It's, should be cleaner. I bet. All right. That's on the phone up. All right, bet. So look, when it comes to weekly profiles, there's different profiles that you can expect per week, meaning like expectations on how the week will deliver to a target. So being that I already had price going to the downside, as I was sharing with y'all before it actually went to the downside, when I see Monday, let's go to Monday real quick. When I see Monday open up, look at this, we gapped up on an open. I know it's subtle, but you gotta understand that we closed down here. Let me zoom be in the wasting time. Look. We closed down here, we opened up right here. So we gapped up and then we started moving higher. To me, I'm like, okay, what are we moving higher for? Because I know it's gonna get shorted, right? Like I know this rally is gonna get shorted. So I'm identifying certain things we could short based on. So, you know, first of all, you can see we shorted this fair value gap. That's what ends up bringing price back to the downside. This fair value gap right here, price rejected on it. Let me show you it on the hourly. Man, it rejected right at the 50%. Like, what a coincidence. The white line is 50%, and that's exactly where it rejected on this fair value gap. That's crazy. What a coincidence. Who would have ever thought? Oh my gosh. All right, so look, my point is this rally right here is a fake out, and I know that because the daily already told me where we're going. And for the week, I expect the fake out to occur early in the week. So where do you think we get? If I'm expecting a red weekly candle, right? If I'm expecting a red weekly candle, what do you think this wick was on the top of it? That's going to happen early in the week, like Monday. That's going to be Monday's rally. And then we delivered for the rest of the week, right? Tuesday, Wednesday, Thursday, and then where did the bottom wick come from? Where'd that bottom wick come from? Oh yeah, Friday's retracement back into the range. Wow, that's interesting. So that's how we formulate these weekly candles. So that can help you if you expect a red weekly candle and trending price action especially, then that can help you frame your expectations. Like, okay, I expect Monday to have some fake out to the upside because I understand we're probably to deliver bearishly through the week. Friday will have a little bit of a retracement, bringing us back into the range, and then we see how it go from there. So that's what I'm getting at with weekly profiles. And if you look at every weekly candle, it's very rare that you don't see a top and a bottom wick on your weekly candles. And so that's just something I want you to keep your eye on. Really, my fault. You can't look over. If you understand futures, you'll know why I say it's not really good to look over here because you have to look at more recent price action with the contract chart. If you understand futures, you know what I'm talking about. But if you don't understand futures, I just lost you. But yeah, so look at the top and bottom wick. So just think there's different weekly profiles and different expectations for especially trendy weeks. Now, and yeah, Jada, she said, excited to learn which fair value gaps are the ones to pay attention to. So ready for the April mentorship. I'm ready for it too. I can't wait to share, and I'm excited for all the new people that's going to be in there. It's going to be a fire experience, like real talk. So much I want to talk about. All right, now let's get it. Let's get into the demonstration. I got a couple demonstrations I want to show y'all that can really help you, like when it comes to, like I said, entering on momentum plays and things like that. Like, you know, sometimes price just moves. You didn't expect it to, but it's like, yo, how do I participate? Price is dying right now. I'm about to put y'all on. So at this time, you see, if I got to the chart and I'm like, okay, this is Monday morning, by the way. Monday morning, I already told you I'm bearish. So I'm any type of thing that show me we about to go bearish, or my eyes is open. I'm like, yo, what we doing? What we doing? Like, I'm like a dog, like, let's get it. Because I'm like, yo, there's so much money to be made on the downside right now because the daily already told me where we going. You feel what I'm saying? The daily already told me where we going. So look, I'm aiming. One thing I can see, here's a setup I see happening. I see us sweeping London highs and running back to the downside. That's what I see because, you know, I'm like, yo, we're bearish, so I don't believe in anything to the upside. On top of that, look how we move into the upside. It's real choppy. The overnight session was nasty. Like, I don't really believe in this upward movement because when price is on a mission, it be on a mission. It get the heck up out of there. All right, so I don't believe in it. So one bullish setup that could happen is we could sweep London highs and head back to the downside. Let's lock in. Let's lock in. Let's lock in. Let's see, 8:55. Oh, my fault. I want to go to 1 minute. My fault. So. I never ever marry a destination. I marry delivery. I married delivery. So not that I was in this play or anything, but I'm actually, this is something I'm saying in hindsight for all of us to learn from. Like, even if you feel like London highs look good, you got the equal highs on the 1 minute, everything look good. Like, if we finna take those highs, never marry a destination, marry delivery. You have to identify areas in price action that should not get invalidated if you're indeed going for that target. And once price shows you it's not going for that target, yo, let it go. Like, let it go. Stop marrying. That's how you hope and hold trades, and you take unnecessary losses in the market. So um at this point, I know I see London highs, but when I look at let's say the 15 minute, for example, I'm like, I don't like the delivery to London highs. And so I'm very open to prices just dropping off without ever touching London, just dropping off immediately. I'm very open to it. So what I want to see is I want to see if price is going to attack these lows and see if it could get any lower than that as well. All right, so price ultimately, you'll notice that it ends up having this crazy wick here at 9:30, and we start making our way down. We lost these lows. I'm interested in price action now. I was on a live trade with this one. We shorted initially. We shorted into London highs, and then we got out, and then we got back. I think I took a small loss in this little section. I think I took a small loss in this little section, and then my computer froze. And then I had to restart the Zoom. When I restarted the Zoom, price started moving. I was like, hey, I can't get y'all back in here. I gotta take this trade. So I did the trade alone, but I did record it and I posted that recording already. So if you want to see how this trade goes, the whole recording is already posted in my Discord. But all right, so let's look at like my rationale for taking this trade now. All right. So, and I'm glad the explanation on the wicks on the weekly candles makes sense. That's what's up. That's what it's about. That's what it's about. So like, here what I'm thinking. You see how we ran these lows, and yes, I am on the 15-second because that's my entry time frame. Also, I forgot to say this part. My apologies. Let me actually back up a little bit. Let's go to like right here. All right. At this point, I didn't get to say this part. My apologies. These is weekly lows. The previous week lows. All right, I don't need this no more. I gotta start cleaning these yellow lines up. I don't need that. Yeah, I see we ran these lows. Okay, so it's showing me like, all right, price is looking very bearish at this point. Okay. And then we ran the London lows instead. So you see we ran London lows. So like, I'm like, okay. And then the green area is NWAG. NWAG is the new week opening gap. Kind of like how right now I have it on my monitor. We're trading through the new week opening gap. I actually shorted into that. Like I got in at 986. So I'm up 86 points or 89 points right now. And we'll see if this thing keep dropping. But I can't lose now because I'm break even. I can't even take, I'm not even gonna take profits. If I go break even, I go break even. But like I got in at 20,986 on the NAS because this is the area I said I would like to see price short. But anyway, what was I saying? NWAG. All right, 5-minute NWAG. So just like right now, the NASDAQ gapped up and it left a gap on a new week. It's the same thing right here. The NASDAQ gapped up and it left this gap right here is important. Whenever we gap up between weeks, it's very important. And so I want to see price fill that out. And then you have the new week lows right here. If we come under the previous week, if we come under the previous week lows and you already anticipate bearish price action, you are very much expected to see continuation. If you're expecting bearish price action from higher time frames, y'all missing the gem. Stop. Like, listen up. If you're expecting bearish price action from higher time frames and you come under previous week lows, you should expect continuation, right? You already did your hard work of charting all these levels, right? We talked about these levels on Sunday. You did your hard work of charting these levels to the downside, and we're running previous week lows. It's very likely we're going to continue into those levels. All right. So with that being said, my fault. Yeah, now, like I said, I got a trade going on my monitor right now. Oh yeah, we rocking, lady cuz. we making that piece right now. I look. So by the time we make it all the way down here, I'm very convinced we're going for previous week lows. And so now you'll be able to understand why I'm on a 15-second at this point. So when we run these lows and my computer is back up and running at this point, and then you see this green candle come in, there is a potential for a sweep. Listen to me closely. I would love to see the yellow line get hit, but there's a potential that we may just sweep these lows and come back up. Why do I say that? Because right after running those lows, the green candle came in. So, this is very much possible. But one thing I understand is which fair value gaps are important. I understand that this fair value gap is extremely important in this scenario. All right. And so I'm watching to see how we trade out that. Because if we use that and start coming back down, guess what I'm going for? I'm going for previous week lows and lower because the higher time frame told me to hold my trade because we're expected to go lower. I bet. Now we on the same page. That's what's up. Sip said she passed the eval just now. I told the mentees we're gonna reject this area. It's in the Discord. It's in the Discord on the mentorship side. So yeah, that's what's up. Shout out you, Tip. Shout out you. Congratulations. All right. So boom. Once I see us reject this, you see that I know y'all, man, y'all better zoom in. Y'all see how we rejected this ever so sensitively? That's exactly what I want to see. And then I get in right here. And once again, this trade is already posted available. So this is exactly where I got in. If you watch the video, exactly where I got it. Now I'm holding it. Holding it. Everything look good. Right now, oh yeah, my stop loss at the time, I would trim right here. If we come back about this wick, I would sell a runner if we invalidated the whole fair value gap. So I would trim at the wick, sell a runner with the whole fair value gap. I never got there. Beautiful. And why do I pick that wick? Because that's the wick that rejected the fair value gap. All right. And it made a new low. It rejected the fair value gap and made a new low. All right. So that's what my stop loss is based on. And so a quick note on that is my stop losses be based on PD arrays. I mean, they're based on PD arrays. So now, man, look how we run previous week lows. It looked good, right? It looked real good. Sheesh, looks great, don't it? Look great. And there's no reason to sell at this point. No reason to sell. I don't want to see price come back about this green wick. I don't want to see price invalidate that green wick. So that's what I'm doing as I'm holding the trade. I'm moving my stops down, and my stops are based on PD arrays. I apologize. Yeah, I know this recording is gonna be on YouTube, so you'll be able to watch it as much as you want. Now, please explain PD array. PD array, I apologize, is premium discount array. What does it mean? You see, for example, you see this fair value gap that we rejected right here. That's a PD array. You know, that's a PD array for you. If y'all ever heard of an order block, that's another PD array. So PD arrays are just areas in price action that you may see price reject on or bounce on. Okay. All right. So my fault. Yeah, and thank you for Mary for putting in the chat. So yeah, I already told y'all what a PD. I mean, I told you guys what a fair value gap is already, right? So that's one of my favorite PD arrays to use. And so you see, I'm holding my trade based on fair value gaps a lot for the most part right now. So you see right now, we see how we rejected this and came down. That's a beautiful sign. And so as I'm holding this trade, I should have actually showed y'all with demonstration. I should have got in through like TradingView's back test, but you know, I would have been moving my stop to right here. So this retracement, I'm only going to take profits if we come back above it. Boom, we reject again. And same thing, like for now, I don't want to see price. I really don't want to see price invalidate this fair value gap on the way down. All right, beautiful, everything good. And guess what? I already had these levels listed. I gave you guys these levels on Sunday that I want to see price come to this 21,510.75. So I'm holding my trade as long as we go and tag that. I know we're going to tag that already. I'm expecting us to use this fair value gap to go and get it. And there you go. We go and get it. Same thing. I'm only selling my trade if we invalidate this fair value gap. I specifically want to see price respect the lower half for the most part. And then, you know, we'll keep see how the trade go. Rejects the lower half, comes down. All right, I'm looking at these wicks right now. And wicks send us lower. Beautiful. All right, wow, that's what's up. So we get into another target, 4-hour lowest body. And by the way, you see the entry. I gotta zoom out a lot for this entry, right? Sheesh. So we got the entry up here. All right, beautiful. We got the entry all the way up here. And I'm holding the trade based on PD raise on the 15 second. On the 15 second. Just showing you guys that, yeah, no, you can trade lower time frames if you know what to look for. And if you know when to go to that lower time frame. But this is helping me hold my trade, understanding what should be respected and what should be disrespected. What should be respected for real. All right, so 4-hour lowest body. I talk about a concept where price doesn't always attack the wick, right, of a candle, especially long wicks. Like sometimes price will reject in those wicks. So a safe target is to get out at the lowest, the highest body at a swing point. And so if you look at, there was a 4-hour low. I'm not gonna go to 4-hour right now. I don't want to throw myself off, but there was a 4-hour low. Imagine it looked like this. Can we use our imagination? What I mean by lowest body is, I'm gonna go to the lowest part of the body side of the candle. I'm gonna put a yellow line, and when price approaches that place, that may be exactly where I take my profits at, because that could cause major bounces in the market. And you're like, man, I thought it was gonna run the lows. It's like, yeah, it got to the lowest body. Yeah, that's a safe objective, but it didn't get to the lowest part of the wick. And so that's what happened on the 4-hour here. We got to the 4-hour lowest body. And since we got to that objective, what I'm doing at this moment is I'm watching PD raise here on the 15th. So like, look, we flashed down just now, right? So I'm really watching to see like, all right, what happens after we tag the lowest body? I don't like this because price eliminated the opportunity to make a fair value gap. This green wick eliminated the opportunity to make a fair value gap. So I don't like that. I don't like that. That's a bad sign. So I'm watching these. These are things I'm thinking about in my trade. You see this wick comes up, like they starting to show signs that they want to push back up. And mind you, here's something else I noticed. I noticed also on the way down, we stopped making fair value gaps. I should have dragged it down here. Honestly, we stopped making fair value gaps on this whole section. Look at the difference between what I circled and on the way down. Now that y'all know what fair value gaps look like, look at the difference. There's so many available to reject on and stuff. And as we finally notice, as we start to get to the target, all of a sudden price starts slowing up, getting choppy. That's what we call engineering liquidity. That's what we call engineering liquidity. So you start engineering liquidity into my target. Interesting. That might tell me that's a good sign to get out. But I'm not going to get out until I see certain things invalidated for real. But I know it's getting suspect. I know it's getting suspect. All right, we keep dropping. I'm like, phew, okay. We got to the 50% of the 4-hour wick now. So this gave us a little turbulence. I was getting nervous. But now we get to the 50% of that 4-hour wick. This yellow line is the bottom of the 4-hour wick. Hopefully y'all following. This yellow line is the bottom of that 4-hour wick. So I'm watching the 15-second trade within this area, and I'm watching the PD raise within that area. All right. So let's go sell side bet. Now here we go. Here we go. We got to the 50%. Dang, this is a horrible sign. Yo, we just invalidated this very important fair value gap. Terrible sign right here, man. Terrible sign right there. Okay, so why would I like hold this trade for much longer knowing that there's nothing else that can reject price? Because automatically price is coming up here, minimum right here, big minimum. So why am I to hold through that? We just hit a target. We just hit one of the targets. And so like, y'all go see, once we made this fair value gap right here, boom, I got out. I was like, oh, guess what we just made? A bullish fair value gap. Let's shift it over. Yo, we just made a bullish fair value gap that invalidated a bearish one. We made a bullish fair value gap that invalidated a bearish fair value gap. That's not a good sign after hitting the target, my people. You got to pay attention to the signs. Pay attention to the signatures. Don't get caught holding the bag. So this is why I exited my trade. Boom, we locked in like well over 200 points. Things good. And then next thing you know, yeah, we got up out of there. Sheesh. Yeah, them boys got up out of there, y'all. I'm trying to tell you. I'm trying to tell you. They got the heck up out of there. Thank God we don't hold the bag. We maximize trades on this side for a fact. And then I think we consolidated for a very long time. We came, let me see. But what a massive retracement that we got out pretty much at the bottom of. And then we came back to the lows and we popped back up. Yeah, that's what happened. Yep, I remember this. Yeah. Appreciate you, Collier. Appreciate you. So look how they came all the way back close to where I entered at. Like, imagine I was holding the bag still. Like, nah, we don't do that, y'all. Pay attention to your signatures and then maximize your trades. So erase that. So erase that. And then let's go to Thursday. Before I get to Thursday, can I get ones and twos? I know if y'all following me, can I know if you're getting something. Did you learn? If you learned something, put a one in the chat. If you learned just even one thing, that's all I care about. Because the class is free. So if you learn something, that's automatically, it already paid for itself. You feel what I'm saying? Because if you learn one thing, you're going to make money on it this week, meaning you just got money for coming to class. You literally just got money for coming to class. Like, how fire is that? You ain't have to pay nothing. Yeah. Whole lot of ones coming in here. Appreciate y'all. Even if you learn one thing, right? You don't got to pick up everything that I say, but just one thing is enough. More than enough. So let's get it. I want to get to Thursday's price action. I think it's coming up right here. So, NVIDIA had earnings on Wednesday and all that stuff. I think this is Wednesday right here. Word, NVIDIA got crazy. All right. So Thursday now, another live trade. We're doing this live with the team. And you see, this is a PD array right here, this hourly RB. I'm not gonna get into detail about it, so please don't ask. But it's one of the PD arrays that we use to see rejections on. So we watching that area to see if price maybe want to reject it. And if it rejects it, the first place I have price going is this hourly bullish fair value gap. You know what I'm saying? The hourly bullish fair value. That's the first destination I have price going. And so the point is, if you have whatever, you might call this a supply zone. I don't trade supply and demand. I don't call it a supply zone. But whatever you validate this rejection area with, what you should do is understand that price targets inefficiencies such as fair value gaps. So if you have a rejection area, you could take profits at a fair value gap. There's nothing wrong with that. So for me, when I get in this, when I look at the chart, let me go back to the hourly, my bad. If my trade idea plays out, that's what I'm telling the mentees. I'm like, yo, right now I feel like the market might consolidate in this area today. And so I kind of want to like take it easy. I'm cool to see price come into this fair value gap. And I'm going to hold the trade if I'm getting reasons to hold the trade, meaning we continue to respect bearish PD arrays. That's the only way I'm going to hold this trade. If we get to the purple area and I start noticing PD arrays getting disrespected, that's bearish. What do you think I'm going to do? I'm going to take profits. So let's just keep it simple. I want to see green to purple, and we're going to hold past purple if we got a reason to. And I'm getting that analysis from the hourly time frame. So when you watch me drop down to the 15-second, I don't want you to lose sight of the hourly. And that's what everybody tends to do. You get consumed with the lower and forget what the higher has told you. All right. So word, if we reject this area, we're coming down there. That's what, 5 a.m. That's still overnight. My bad, y'all. I ain't want to do the spoiler like that. My fault. Dang. All right. So what is this? 7 a.m. candle. Something something you might peep here is we really holding the lower half of this PD array, and that's exactly what I want to see, man. Like, that is exactly what I want to see. So I'm very interested in this area right now. Still, could we just hold in the lower half? 8:45, 9. I'm trying to get to New York session, which is when the live trade would be. 9:30, boom. All right. So, yeah, yo, we holding a lower half. Things look good. I'm like, man, what a choppy start to the day. Like, look at it. It's not really favorable. Let's get in, honestly, with a little more confirmation. You don't have to like rush your way into the trade, because even let's say I would have waited until we ran these lows. You realize that these lows are from 68 and the top of the purple is at, let's just say like 38. That's 30 points. And I'm not saying 30 points is not a home run, but 30 points is some money on the NASDAQ. Low, you know what I'm saying? McDonald's like breakfast burrito or something, like, you know what I'm saying? Get a little, it's just a little snack off of that. So even if we just had to scalp into the purple, even if you just scalp into the purple, there's nothing wrong with that. But the thing is, I know if we run these lows, purple's next. I obviously got it up here, and I'm gonna tell you why. So this goes into the part of class where I was talking about like entering on impulse. Not impulsiveness emotionally, I mean an impulse move. As you can see, this is clearly an impulse move. So here's why I got into the trade. I see us holding the lower half of the green area, and then we run these lows with a fair value gap. All right, we run these lows with a fair value gap. That is exactly what I want to see. I love that because that's showing energy to move past those lows. So when I see us running through the fair value gap and then we don't come back to that fair value gap, I'm getting in my trade. When I get in my trade right here, immediately, I don't want to see price come back above this fair value gap right here. I know for a fact if we came back above here, I'm wrong. Like straight up. I mean, real, like if we came back above here, I'm wrong, y'all. And I would cut my trade. Okay. So if you notice, that would be a 20-point loss. If you're familiar with futures, a 20-point loss is not a lot at all. And if 20 points is gonna blow your account, you're over leveraged. Size down. You should be able to take a 20-point hit on NASDAQ. So my point is, if I'm getting in where I got in at and my stop loss is above the blue, I'm risking 20 points. But what am I aiming for? What am I aiming for? I'm aiming for something 65 points away minimum. So I'm risking 20 to make 65 minimum, big minimum. Spoiler alert, this trade ends up going 400 points, but I risked 20 for it. All right, so once again, the reason why my stop loss is here is because I understand that this fair value gap needs to be respected if we're bearish. There's no reason to come back up into this area right here, back into this range. So I'm entering on impulse, it looks like it, but I have a clearly defined target. You see these lows? And I have the purple. And how do I know that? Because the hourly told me we're going from green to purple. I'm gonna say that one more time. The hourly told me we're going from green to purple. So even though it looks like an impulsive entry, I have a clearly defined stop loss based on PD arrays that I know need to hold. And on top of that, I have very clearly defined targets with a solid risk to reward. Can I get ones in the chat if you understand what I'm saying with that? If you just understand the logic. I just want to know if you understand the logic. That's it. Ones in the chat if you understand the logic. If put a 2 if you want me to say it, and just say it one more time in a different way. I'll tweet. I missed some. I missed some stuff. I see a bunch of ones. Yes, 2. I got some 2s coming in. All right, bet. First of all, I appreciate all the ones, and I appreciate the 2s as well for being honest. All right. I need a video explaining why you sell at the bottom, how that makes money. Why you sell at the bottom, how that makes money. I'm not sure. I'm not understanding the question on sell at the bottom, but maybe ask me that a little later in class, and I want to try to address it. But let me explain this for the people that put 2s in the chat real quick. So what I'm trying to say is this, everybody. And yes, you can Zoom user. So what I'm trying to say is this, everybody. On the hourly chart, I have an understanding that this green area is a bearish PD array, meaning that I expect this green area to reject price. And if it's going to reject price, let's go back to the hourly. If price is going to reject there, if price is going to reject there, there's nothing that should stop price from coming at least to this purple area. Just big minimum, major minimum. So when I'm on these lower time frames, what I'm looking for is a signal that price is ready to go there. Okay. And what I notice is, first of all, time needs to be a part of my equation. So trying to take that trade here at 8 o'clock, 9 o'clock, these are low probability times. If the market is going to make a major move, usually it's going to do it after 9:30, just usually. So time needs to be an important element in your analysis. So I waited till 9:30 to get into the trade idea. Plus, that's when I'm live trading anyways. And so I'm live trading this time. And then you see how we run these lows and my eyes are open because Yeah, I don't trade market structure. That's the traditional way. But mentees, can you guys recognize mentees? Why this low is extremely important. This is Thursday's class. You don't have to say it in the chat. I would prefer that y'all don't say it in the chat. But like, y'all see why these lows are very important, mentees. Now that y'all did Thursday's class, all right, hopefully y'all can see it. So that's why these lows is important to me. Like, oh shoot, we lost this. That's a very bearish sign. Very bearish sign. Now, how do we lose those lows? How do we lose those lows? We lost those lows with bearish fair value gaps. Ah, man. So what I understand about these fair value gaps is if we're going to continue to the downside, which is the expectation anyways. But guess what? We get it wrong sometimes too. We're not perfect. So if we are going to continue to the downside, what I understand is price shouldn't come back above this fair value gap. How did you know that, bro? Like, why not the other fair value gap? Yo, I'm telling you, I can't teach everything in one day. But at least you guys can understand that I'm using fair value gaps as a line of defense. Which fair value gaps? Yo, pull up to the mentorship. Like, I can't. You know what I'm saying? That's a whole, I got like mad classes on them topics. Whole lot of classes on those topics, PowerPoint presentations and all types of stuff. Heard. You said I'm not a mentee, but it looks like a swing low. I don't expect you to tell me the correct. No, it's not just the fact that it's a swing low, because there's a lot of swing lows and swing highs that are irrelevant in the market. And that's why I don't like traditional market structure, because a lot of swing lows and swing highs don't mean anything. But in this case, it happened to mean something, but I would say that's more so coincidental, because I could show you another low that wouldn't mean anything to me. So there's a little bit deeper understanding than that. But in this case, yeah. And then we lost it with a fair value. So that's something that's important to me. So when I get in here with a stop loss above, let's get it. We rocking. All right. So, and Jamal said, oh, because the low is inside the fair value gap, and that would invalidate the move if it takes out the low in that particular fair value gap. So that has something to do with it, right? We looking at this fair value gap. That has something to do with it. I wouldn't want to see it come back into this overall range. Plus, if we invalidate, all right, think about it like this. Imagine we came up, we invalidated this fair value gap, the small one, and the blue one. Okay, so we just invalidated two bearish fair value gaps. For what? Like, for what? To come where and reject on what? Like, to come where and reject on what? Because I don't see nothing else. There's nothing here. Please, for the love of God, please don't call these green candles an order block. I'm gonna fight one of y'all trying to call these green candles an order block. Don't even try it. Anywho, so there's nothing that's gonna stop it. You're gonna look at this fair value gap. I wouldn't look at that fair value gap. I would expect the price to run buy side. If it came back here, it's gonna end up running these ways. So my point is, once again, if we're bearish, the only bearish setup that I personally like is us maintaining this area before going lower. All right. The green area is an hourly PD array. That's an hourly PD array that's supposed to send us bearish. And so we're supposed to take green to purple. All right. So now we enter stop loss as we run these internal lows. Okay. My stops go break even because there's a potential here that we could, and that's what I did on the video, by the way. If you watch the video, because this whole trade is posted on YouTube, if we run these lows, that could, if we sweep these lows and pop back up, I wouldn't want to see it come back to my entry and stay bearish on the market. I would think it'll be bullish. Why would I think we're bullish? Because this fair value gap is the important fair value gap in this scenario. Wow, that's crazy. So you're telling me the 15-second chart really, like, you could actually analyze a 15-second chart? Yeah, yo, I'm trying to put y'all on. Facts. If you know what you're looking for, yeah. The same concepts I use on the hourly and on the monthly, I use on the 15-second. Facts. Yeah, because price is fractal. I know. It's crazy, right? They didn't tell you that. They didn't tell you that. But it is. If you understand price action for real, you realize it's an algorithm. It's all coding. It's all coding. So yeah, it's the same stuff that work on the hourly, work on the 15-second. That's a fact. Word. So anywho, if we would have invalidated this, I dang sure want to see it come back to entry. So that's why I'm like, yeah, I'm break even now. And plus, we already knew that it's supposed to come to purple. We already knew it was supposed to come to purple. Boom, we got to the destination. All right, so do I take profits? I'm not mad if you do. Like me, I like to maximize it. You're gonna have to prove to me that you about to turn around before I go ahead and take profits. You're gonna have to prove to me something. So, all right, we come, well, there's nothing happening that's telling me to get out my trade. we get to the bottom of this fair value gap. By the time we get to the bottom of this fair value gap, yeah, here's what I'm thinking. Let me show you something. I'm like, yo, we not using this hourly fair value gap, because what I understand is if we were bullish, we would have used the upper half of that. Wow, you see how I'm on the combined concepts? If we was bullish, we would use the upper half. So yo, we all the way at the bottom of the fair value gap. You know what price is going for? Asia lows. So I'm like, yo, I'm holding this trade for real. We going for Asia lows. Boom. So now I'm focused on these, and to me, I'm like, yo, if we run Asia lows, we're gonna run NVIDIA lows. I call these NVIDIA lows because this crazy candle you see here was created on NVIDIA's earnings. So I'm like, if we run Asia lows, we're gonna run NVIDIA lows, and sheesh, if we're gonna run those, we're gonna run yesterday's lows. Oh snap! Hold on, we might got a bang on our hands. Like, so I'm really like thinking like, yo, this trade about to go crazy. Like, cause why would it stop right here and not tag this other pool of liquidity? So can I back up and remind y'all that we trade for liquidity? Liquidity causes some of the best moves in the market. So when you watch how this trade goes like this right now, you'll probably learn why I don't trade support and resistance. I trade for liquidity, because your demand zone right here, your support levels, whatever the heck, I'm taking all of that right now. So that's chips right there. Taking every last crumb. You know what I'm saying? That joint is candy to me. All them demand zones and all that stuff, because I understand we in bearish order flow. Everybody who's been profitable right now is about to get stopped out, because things is sweet when price, making all these higher lows and you got your pretty little trend lines and all that stuff. It looks sweet until it's not. I'm cool with the zigzags. I'm gonna take the straight roll. I'm gonna take this. So I'm cool off of that. I'm gonna take this. All right. So anywho. We on the 15 skate. We start flashing up a little bit. I don't want to invalidate this green wick right here. Mentees, maybe y'all could recognize that goes into Thursday's class as well. Don't want to invalidate that green wick, ideally. So I'm a little nervous, but we still valid. Plus, to be honest with you, it would have taken a lot for me to sell this trade. Like, I feel like I probably would have had to, I'm not saying I wouldn't trim more or something like that, but I would have had to see price come above this area for me to really be bearish, because let me just remind y'all real quick, the hourly already told me where we're going. So I know I got a bang on my hands already. Like, I already know that. So I'm not even tripping on this purple area, because once again, if we was going to use this purple area, it would have been used up here. It would have been used up there. So once again, deeper understandings of fair value gaps can really help you significantly in this market. All right. So we continue dropping. I already told y'all we looking for them Asia lows right there. Trailing, yep, this fair value gap, important. Going down. What we got? NVIDIA lows coming up next. NVIDIA lows tagged. Don't want to see us invalidate that green candle. Cool, kept it. Moving down. We got this other level. This is something I've given y'all since last Sunday. So, I'm looking at that level down there. It's not a support level. Don't ever get it twisted. It's not a support level. It's liquidity. It's not a support level. It's liquidity. All right, cool. So we looking at price of tag. Yeah, when we take liquidity, we take it aggressively. Like, can y'all just peep this? When we take liquidity, we take it aggressively. I just want y'all to remember that for the rest of y'all lives. Like, that's what price do. Don't ever get it messed up. That's what price do. Okay. So my fault, just managing that trade I told you I was in. Just trimming. I just trimmed a little bit. All right. So look, my fault. Boom. What do you say? February 2nd load. Okay, so now, so we get to a target, my people. We get to a target. And then anytime we get to a target, I'm watching close. I want to see, like, what we about to do? So what we did is we rejected this fair value. That's a beautiful thing. But what am I still looking for? PD arrays. All right, we get to a target. I'm watching PD arrays by target. So if you take anything from today so far, remember to watch your PD arrays near your targets. That here's a PD array near my target. Fair value gap. Boom. We up for the test. Let's see what price do with it. I'm nervous. Yo, the party might be over. Yeah, I ain't gonna lie. The party might be over. What's up with that? That's suspect. You know what? I'll give it room for one more PD array. If we invalidate 2 near my target, I'm out of there. 2 in the 15 second. If we evaluate 2 in the 15 second, I'm definitely out of this. So for me, I already know, yo, if we come back over this green wick, it's over with. It's over with. I know that already. So boom, then exit. That's where we took profits. That's where we took profits. So here we catch this whole trade. So erase some of this stuff so it's not as confusing. Boom. Boom. Take all that out of there. This is our trade. We took this on live. Got out right here. As soon as we get out, I said to them you can watch on the video. I was like, yo, watch price rally right now. I was like, watch. I'm telling y'all, we just got out at the bottom. Y'all gonna see what I'm talking about. Watch price rally. And then y'all gonna see what ends up happening. We got out at the bottom. Price start coming back up pretty heavy. Like, thank God, because they just took mad of our profits back. It get bad. It get bad. And the price consolidates right in here until for the next like 5 hours. Thank God we got out where we got out at. Price isn't consolidated here for the next 5 hours. Like, yo, beautiful thing. Beautiful thing. And so when does price tend to consolidate? Price tend to consolidate when objectives are met. Once objectives are met, that's when price consolidates. So guess what? We just met an objective. That is that February 2nd low. That's that sell side liquidity, the level I told you about on the watch list. After we ran that and we come back around this range area, yeah, I expect consolidation. You know when the next impulse move is going to be? When we run the low of the day again. So when we run the low of the day again, that's when I'll be interested in price action. But I'm about to show y'all right now. Look at price do. Look like my screen just froze or something. Yeah, I think my screen just froze. Hold on. I don't know why. You guys could, yeah, I'm shopping, right? All right, so I think I'm back. Yeah, I think I should be back now. All right, so what you'll notice is, I appreciate you, Jessica. So you see how we got out right here? We got out at like a little bit after 10. Let's just call it 10:02 or something. I don't remember the time. Look at when we actually started moving again. This is 2 o'clock. After 2 o'clock, we started moving again. So the next 4 hours, price stayed in this range. And this is why when price meets objectives and you see price give you signatures that it's ready to turn around, I wouldn't really look to play the counter trend like that. If I don't feel like we're done with our weekly objective, I would just wait to see if we can run the daily low, basically the previous low, because y'all know we still had this level to get. We still, well, don't forget, y'all. Don't forget what we talked about on Sunday. We still had this level to get. So even though I know we bottomed here for a minute, I knew we wasn't done. I ain't gonna lie, I didn't think we was gonna do that day. I thought for the rest of Thursday it was gonna be like this. I thought Friday would do something to the downside, but they went crazy after. So, and then I ended up taking this like with SPX. I didn't touch futures again. I ended up taking this impulse move down with SPX into the lows. But yeah, and yeah, I'm using SPX. I'm watching NASDAQ because the S&P 500 and the NASDAQ tend to move together. So I'm using SPX. I got SPX, I got SPY, and I had NASDAQ up in a 3-way screen or whatever. Just watching type vibe. But yeah, and then we end up tagging that level. And then last thing I'll show y'all here really quickly is if you could, I need to go to Friday. Show y'all something real quick, man. Let me show y'all something real quick, man. All right. So, you know, Thursday was crazy. Friday comes out chopping. Terrible day of price action, like the ups and the downs and stuff. I think I was able to make some money on this trade. Where it's at Friday play right here. I put this in my Discord already. I was able to make some money, like, a little something, man, just to the upside, because I was expecting upside, because the day before in my class on Thursday night, I told everybody I'm looking for the NASDAQ to make a move into, drumroll please, into the lows from February 2nd. Ah, man. So what did price do at 3:50 p.m.? It ran all the way to the place where I said it was going to go to the night before, and it ended the day right there. These is after hour candles. So this whole move up, like, we know where it's going. Price had to go there. Once again, that video is posted in my channel as well. Everything I talk about factual, and it's all everything public. All right, so what's crazy is there's a phase 2 concept. Shout out my phase 2 people in the room that tells you that price is not going to come back under this level for the rest of the day. And so when price makes this move down, we already know it's not going to cross here. And then when it pops up and it has a bullish fair value gap, see, the purple one is a bullish fair value gap. When it comes into this, that's a high probability entry. Did I take it? No. So this is something I'm saying in hindsight right now. In hindsight, I knew price wouldn't come under these lows, but because of the price action all day, plus I already made my money, I did not take this trade. No, I did take some of this part though. I'm not gonna lie to y'all. I took this part, but I ain't take it down here. But I just love to see it work out. And I like to show this just to show y'all that price action is predictable and it's algorithmically driven. Since very early in the day, we already, phase 2, some of y'all in here, my phase 2 members, which is the second phase of my mentorship, we talk about how price, very high probability, I'm talking about 80 something percentile, that price will not come back under this low. So when price gets this close, then pops up. Yeah, I mean, you see what's going on. This is a high probability fair value gap now, and then we move to the place where I told everybody on Thursday night that we're gonna come here anyways. It ran there at the last part of the day, and that's a very nice little delivery right there. And then here we are. All right, so that is the completion right there of the demonstrations, and it's time to move to the next segment of class. All right, so I really hope y'all got something out of like the things we talked about thus far. You don't have to get everything, but if you get even just a few things, your time is well spent. But there's still more gems to get. Appreciate you, Marcus. So yeah, still more gems to get, yo. Price action is so interesting right now. I'll talk about all that in a second. Let me just clear my screen. Look how much cleaner my screen is now, right? We back and better. I don't need this no more. And I don't even necessarily need this no more. That's all I need. Definitely don't need that. That's all I need. That is literally all I need. I love it. This is like therapy for me. And thank you guys, girl. I appreciate you. I appreciate you a lot. All right, so what is it now? Chart debate, right? Yeah, it's time for the chart debate. Oh man, it's about that time. It's about that time, people. Chart debate. What we doing? Come on. I'm tweaking. Okay. So here we go. On the chart debate, you can see that this was the question I put out. Which one's gonna play out? Arrow 1 or arrow 2? Arrow 1 or arrow 2, y'all. Who's the water sponsor today? I don't even worry about it, for real. We can't get no free promo. So guys, girl is standing on. She said, "Yo, I picked arrow 1. I don't know about the rest of y'all." Jessica said, "I picked arrow 2. I don't know about the rest of y'all." So we got different answers. And for the free community, 32 people picked arrow 1 and 15 people picked arrow 2. So arrow 1 is definitely more dominant, but we still got a bit of a mixed group. I'm nervous for this answer. I can't front. I think it's time we check in with the mentees and see what they talking about. Let's see what the mentees are talking about, because they seem to always get these right, but maybe this week they got it wrong. So let's find out. Sick of these stupid mentees. They think they know everything. Let's see what they talking about here. Oh my gosh, dang, y'all. Every mentee that answered pick arrow 1 is crazy. Yo, I ain't gonna lie, y'all might get embarrassed today. Mentees, y'all might get embarrassed today. All right, so a lot of people standing on 1. Hold on. Yo, I don't know, mentees. Let's find out, because I'm dead nervous. Hold on. Whew, I need a sip of water. Yo, somebody, y'all could like give me some help or something. I know, like a hospital in New York I could go to or something like that. Oh my gosh, yo. Should I reveal this? All right, let me just reveal it real quick, because I know people be mad, impatient, and all that crazy stuff, man. Mad, impatient, and all that, yo. The answer is arrow 1 ski, indubitably. And it went crazy too. They got up out of there. I had to zoom out. Honestly, it kept going too. Like that thing went way higher. I was like, I can't even fit it in the picture. That was a crazy rally that came out of that. So yeah, everyone, they not like indubitably. Mentee said this one was easy. That's how y'all feel. I remember that. Remember that. Remember that. All right. Y'all think y'all nice. Like, oh, that one was easy. I bet. Y'all gonna see. All right, so like here's something that I want you to recognize in this picture. Understand that if we were bearish, we wouldn't be moving so staggered to the downside. And then we have an unmitigated bullish fair value gap in a discount. What do I mean by discount? You can measure price legs. So peep game, you see this price leg right here? You could take your Fibonacci retracement tool, start it at the bottom, take it to the top ski. There's gonna be a 50% level right here. And under the 50% level, if you see a fair value gap that has never been touched yet, there's a strong probability that price may use that to go higher if you have not met the bullish objective from a higher time frame. You need to make sure price has met the bullish objective from a higher time frame. But I know you don't see the higher time frame objective in this picture, nothing like that. But once again, it's a telltale sign that we're most likely going to use that, because of this is not how sell-offs typically happen, especially after a sweep. Especially after a sweep. So this is a staggered move down before an impulsive move up. And if you don't believe me, that is going to be an impulsive move up. Why don't you just look at what actually happened? Why don't you just look at what actually happened? Yeah, that's how price. Yeah, you see them fair value gap? Yeah, them things. Them things, man. Them fair values is beautiful. Yeah. And he said, I'm gonna give y'all 15 arrows next week. Yeah. You said that's what did it for me. It didn't kill the fair value gap, indubitably. And so, actually, speaking of, see, there was a decision to make. The decision that I had to make. That I'm gonna see who can make that decision. You see, in arrow 2, I made you see I price tapped into the bearish fair value gap right here. There's a small bearish one. I want to see who think price would tap into that and go lower. But really, in this scenario, I wouldn't want to see price use this fair value gap. So there's like a few different signatures you would need to know about price action to really accurately predict these things. But like, as I be trying to tell y'all, to pull up to the mentorship, because this cannot be a coincidence every single week that they be getting all of these right. They get the same chart as y'all. We all look at the same chart. I don't care what you trade. What I don't understand is, I don't care what strategy you trade. If you get into a trade, should you not have an idea of where price is going? Because if not, are you not gambling at that point? Like, why are you taking puts if you don't think price is going lower? Why are you taking calls if you don't think price is going higher? You're gambling. So when people say like, how could you know where price is going? Like, the market's not predictable, whatever. First of all, that's cap, because I show it every week. Second of all, it's like, okay, so when you trade, you're just telling me that you gamble. Like, that's tough on you. Like, that's tough on you for real. I can't relate. I'm not gambling out here. Everything I do is based on high probability setups. This happens over and over and over and over. to the point where it becomes a lot more predictable. No, you won't be perfect, but you'll be very much like it'll be enough accuracy to generate profitability. All right, so that's a chart debate right there. And last but not least, let's get into what we think is going to happen in this upcoming week. So I'm excited to talk about this part. So you definitely want to stay around for this. I'm gonna try to make this as quick as possible, but we gotta talk about what's gonna happen in the upcoming week. So let's take it to the weather report. And I call this a weather report because you always want to find out what's the best days to trade. Just like if you was planning a party or something like that, like you're not gonna plan it on a day where it's rainy. Well, guess what? This party is a money party, right? You're not trying to be in the market trying to make money on days that has a low probability of playing out for you. So you see here on Monday, just managing that trade. Like I said, you see here on Monday, we got PMI, ISM. Those are okay news events. But the thing is, it's NFP week, which is non-farm payroll week. So that means the unemployment numbers come out. And usually the Monday of non-farm payroll week is pretty eventful. So I do expect some eventful price action on Monday. Tuesday, I think is going to be lackluster. Wednesday, not going to be much like that. The day before FOMC is usually really trash. So I think Thursday not going to be that great. Friday should be fire. So, yo, Friday, you got unemployment numbers coming out, non-farm payroll numbers. You also got my boy JP speaking at 12:30. And if I'm not mistaken, I think Trump is also speaking on Friday, but I'm not sure. I think somebody told me that. So, yeah, yo, Jerome Powell speaking at 12:30. Word. And it's non-farm payroll day. Yeah, it might be some action that's gonna hit the market on Friday. It might get like that. So just understand, if the aggressive price action is supposed to come on Friday, you have to think about what type of setups may occur throughout the week. We tend to engineer liquidity, and then the news event will go ahead and run that liquidity that we engineered. So be wary of an engineering of liquidity throughout the week. All right. That being said, let's take it to them tickers across different markets. So I'm gonna go down to DXY and let's really talk. Let's go to the dollar right quick. Let's go to the dollar right quick. See what it's hitting for. No, I think Monday is gonna have some moves. That's what I was saying. I think Monday is a solid day to trade because it's non-farm payroll week. I think Monday should be some moves. Thank you, Dwayne, for saying crypto summit at the White House on Friday. Appreciate you. Bet. So exactly. So a lot of crypto action coming on Friday as well, which might also have an influence on the actual stock market. All right, so last week I told you guys that I'm bearish on DXY. So this is something that I got wrong on last week. So last week I told you guys, hey, I'm bearish on DXY because for me to be bullish, I wanted to see price hold this fair value up to go higher. And so since we didn't hold that, I'm looking for price to come into these lows, at least the lowest body. I did disclaim it and tell you guys I'm not fully convinced on bearishness unless we run this green wick, because this wick is very important in context. In context is very important. Mentees, maybe I can recognize it. This is Thursday's class again. Mentees, that's why that green wick is important. But we're seeing good signs that it's gonna run the green wick, because we invalidated this bullish fair value gap. See, we came under it with a body. We got a body under the blue area, this red body. Therefore, that bullish fair value gap is invalidated. So I'm now looking at price coming to the lows. Okay, everybody on the same page? All right, let's work. Cool. But here's the thing. I don't marry destinations. I marry delivery. So yes, I said it on Sunday, but mentees may know early in the week, I told mentees, I said, hey, yo, mentees, I say, yo, if DXY invalidates this 4-hour blue area, I'm bullish on it for real. I'm not worried about the yellow line if we invalidate this blue area, because if we bearish, it has to hold this SIBI in order to remain bearish. And that's the benefit of being in the market. You know, you're going to get the updates on a daily basis. But here we go. Once we run these, I'm okay, I'm bullish. I'm looking for price to run these highs, and we're going to see where it go. So now, with that being said, going into the rest of this week, yes, it's consolidating, right? As you can see, it's not really, I mean, we did have a nice breakout day on Thursday, so I won't even say that. But this fair value gap is extremely important if we want to maintain upside. Because right now, you got this bearish fair value gap that we still hold in technically on the daily. You got this bullish fair value gap that we just created. I personally feel that if we were going to remain bearish, price would have used this to go lower. So the fact that it didn't use it, I now lean bullish. But to confirm bullish, I would like to see us use this fair value gap and go higher again. Then I would be like, all right, I'm definitely bullish and I'm expecting price to really have a strong move to the upside. So yeah, yo, DXY, I lean bullish, but I think it's very crucial that we respect this bullish fair value gap, ideally on the upper half of it. So what I'm gonna be watching for is this 4-hour bullish fair value gap. I want to see us respect that and move higher. If we invalidate that, I'm not a fan of DXY, because that means that a very highly probable bearish setup did not work, and a very highly probable bullish setup also did not work. So what does that tell me? That usually tells me that this could be a low probability area, and we may end up like consolidating here for a little while. And then honestly, what will probably make us move out of the area in whichever direction is going to end up being FOMC on Friday. All right. Yeah, I'm gonna get to crypto right after this. I do old markets on this side of class. So, this is DXY. I'm gonna touch Forex for a little bit. Forex tickets I was looking at, and then I'll do a little crypto right after, and I'm gonna get back to futures/options. All right, so Euro USD. What was it about this area again? Yeah, I mean, first of all, this is clearly low probability price action as we see. Price has engineered liquidity to upside, so you see these equal highs that we got. I don't like that. Usually that's a bad sign. Price might go for that, but at the same time, if I have an expectation on DXY to move higher, it's a chance that Euro can move lower. So just like DXY, guess what I'm watching? I'm watching this fair value gap, this bearish fair value. I want to see how we treat this. But once again, it's a low probability area, so I take every PD array with a grain of salt. Anytime price is chopping, I take PD arrays with a grain of salt, because none of them really hold. Why? Because PD arrays, listen to me clearly, PD arrays are expected to take price somewhere, meaning we're supposed to reject it and go somewhere, or bounce on it and go somewhere. But if the market is consolidating, we are not trying to go anywhere. So why are you using PD arrays if we're not trying to go anywhere? PD arrays are for when price is ready to move. So if I notice that price is being held in a manipulated range in a consolidation, I'm not really tripping on PD arrays. So yeah, so we can keep our eyes on it, but Euro has already shown me it's low probability area. It's probably best to wait for a news event to give price some energy. All right, I think above these highs, we probably see this blue area, but I think below, if we use this and go lower and below those lows, then of course we're gonna make new lows and all of that stuff. But I would say wait on it. So that's Euro. British pound is very similar. Very similar. So we did. I was looking to see if price is coming in here. I want to see what price does in here. It probably will end up coming into this fair value gap, but I want to see what price could do there. But not really like a highly probable setup in either direction. Like we swept the highs, we just swept the lows, and there's no fair value gaps here. I think ultimately I would stay away from, I don't see anything on Forex that I like right now, except I remember New Zealand dollar looked real interesting to me. So let me see this one. This one was interesting. So we had a monthly SIBI right here, which is a bearish fair value gap. Is that the first time I said that today? That's on me. A SIBI is a bearish fair value gap. Dang, I feel like I didn't say that earlier. A BISI is a bullish fair value gap, okay? A SIBI, the one with the S, is a bearish one. So if you notice, we have a bearish fair value gap that we rejected right here, and we came down, and we made equal lows pretty much with these previous lows, and you got these lows below. I feel like we want to go for these lows, especially because when you look at the daily chart, you can see this impulsive move after rejecting a bearish fair value gap. So to me, I love this reaction off of the bearish monthly. When I'm looking at the daily, I'm looking at this bearish daily, and I want to see price respect this area and head lower. If we disrespect this area, I'm not bearish on it no more. All right, so I'm really watching this area to go lower. I think if we run last week's lows, whenever, and I might even just set price alerts here. If we run last week's lows, which is Friday's lows, I expect continuation into, first of all, the yellow line, but even on a day trade level, probably the 50% of this green wick, even on the day trade level. So it's just some things to look at. I like New Zealand dollar a lot. That had a nice little setup there, in my opinion. Yo, USD CAD, I think it's the last Forex ticker here. Yeah, last Forex ticker, USD CAD. All right, so people may remember who's been following me for a while. We've been sniping this thing up and down. We talked about bouncing on this fair value gap right here. It's no longer on my chart, but there was a fair value gap right here. We bounced on. We wanted to take it to yellow. Got to yellow. It came down. We aimed for this weekly BISI. I did not think that this weekly BISI would necessarily work, but I told us we had to keep our eye on it. We had to keep our eye on it. And I said, what's going to make the decision for us is you got a BISI, bullish fair value gap, versus a SIBI, a bearish fair value gap. So literally, it's like blue versus purple right now. And that's where consolidation tends to hit the market. So if you don't believe me, let's kind of like look at that area real quick on a lower time frame and just check it out. Like I said, this is where consolidation hits the market. It's when we're in between sentiment, because they're both very valid PD rates. So that's another way to anticipate chopping the market. Sometimes it's just best to wait for price to choose a side. Notice that we invalidated the blue area, so let's delete that. And then what do you notice right after we invalidated the blue area? All of a sudden, the PD rates start working again. All of a sudden, like it's like magic. PD rates working, blue area tapped into what? This red candle tapped to another bullish fair value gap. This is consolidation a little bit. Once we break out, boom, bullish fair value gap. Then respected another one, made a new high. And then this is where we currently at right now. We gapped down a little bit. We're gonna see where it go. But my point is, sometimes it's best to avoid this part and just wait for price to trend again. Let the market figure itself out, and then you can get back involved at the end of that process. So here we are rallying and all of that. Very good signs here on this ticker. I don't want to see price come back down into this area. So anything to the downside, I would like to see it respect this bullish fair value gap right here. If we invalidate this, there's definitely a chance that price, I mean, first of all, I would aim for this, but I think it has a chance to run those lows. So I really want to see this one work out if we're going to move higher on USD CAD. All right. So somebody in the chat says, trading Forex right now. My girl put me on to you and wants to trade futures now. Just don't know how or where to start. Definitely on the place now. That's a sub. I appreciate you. That's a sub. And shout out to people that recommend what we do here at BTSMC. For real. The part where I get tripped up is using what time frame for what I'm trying to do. So time frames are everything we do. We use multi-time frame analysis, and we use confirmation time frames for a lot. You didn't know what time frames to pair up with what. So for example, notice how, what ticker was that? I think New Zealand dollar. Notice how I had a monthly point of interest. Monthly. All right. What time frame did I go to kind of give myself PD rays I want to see respected? I went to the daily to go to see what PD rays I want to see respected in order to confirm my monthly analysis. So if the monthly tells me yellow line, I need daily PD rays to be respected in pursuit of that yellow line. All right, because we pair up the daily with the monthly point of interest. And if you want to know all the pairs, if you want to know all about those confirmation time frames, on any video on my Instagram, any video, just comment the word entries, and it's gonna send you a confirmation time frame checklist to your DMs. All right, or your email or something like that. I think it's your email, but it's a robot or whatever. It's like a bot, whatever. So just on any video on my Instagram, go there, comment the word entries, and you're gonna be able to it's gonna send you the whole checklist. You'll know, yo, pair up the daily with the monthly, the 15 with the 4 hour, all that is going to tell you all of that, and it'll give you a couple examples. All right. Michael said, can you explain the whole Asian lows and everything? What I do there is I'm identifying very popular sell side pools and buy side pools, because there's a lot of high probability trade setups that exist there. But you know, it can get a little deeper than that. I have an entire class on that in my mentorship, like an entire class on just how to treat those session lows. Session lows and session highs, of course, that session liquidity. I have a whole class on that. It's one of my favorite classes because it's so important. But like I said, it's a whole class, right? So for me to even like tell you everything I know about it, that we're gonna be here for another hour and a half. I don't think y'all like me that much. The Zoom gonna be empty an hour and a half from now. Y'all gonna be gone. You know, like, man, sick of this guy talking too much. So, but where? Let me not delete that. I need to see that. So I want to see this respected. But that's forex for you. Now let me get to crypto real quick. So, for crypto, crypto funny, crypto real funny. Crypto real funny, y'all. All right. So you see how price flashed down, came into this weekly fair value gap. Very important weekly fair value gap, I must say. Very important one right there. Let me go ahead and highlight that for y'all. This is why I told my bros, I say, yo, Bitcoin, like, and if it loses 70, it gets very bad for Bitcoin. But the reason I told my bros 70 is because I understand we need to make it past this fair value gap first. This fair value is very important for Bitcoin. Now, we tapped into it, and y'all might have seen earlier, you know, we rallied really hard off of it. And of course, they're going to blame it on the news. They're going to say, hey, Trump said something. But meanwhile, like, y'all see what Price is really reacting to. And Price got hit Friday afternoon. Trump didn't say what he said until today. So yeah, people want to blame it on the news, but we looking at it from a technical perspective. But anywho, because once again, charts come first. Charts come first. Charts is the where, news is the when. Charts are the where, news is the when. All right, anywho, this fair value gap is very important to me right here. So when I seen Bitcoin flying in here and we filled it out and we started to come down, that is really interesting. I am very much in between sentiment on Bitcoin because I'm gonna let NASDAQ confirm that for me. And y'all gonna understand my NASDAQ analysis right after this. I'm going right to NASDAQ after this ticker. So if NASDAQ to me gets bearish, I'm bearish on Bitcoin. If NASDAQ to me flips bullish, I'm bullish on Bitcoin. That's how I'm carrying it. So yes, it's an important area, but so is this blue area. So basically it's like blue to blue. We could stay here for however long, but I'm in between. Once we lose either one of these blues, I get either bearish or I get bullish. I think to be honest with y'all though, like actually, yeah, I could say that. I could say that. That's fine. Facts. Yeah, it's blue or blue. Let me actually put that back, my bad. It's blue or blue. I'm bullish above it, I'm bearish below it. Anything between, it really could go either way. Real talk, because we're very much in between sentiment, and I'm gonna let NASDAQ confirm that for me. So let's go to NAS with that being said. Let's really chop it up and see what it's looking like. All right, so I know some of y'all new here, but I think it's best explained like this. Some of y'all new here. On July 7th, 2024, I told everybody in this type of class, it was a Sunday class and a free class on Sunday. I said, yo, back when price is down here somewhere, I said SPY is gonna go to 611.85. And when it gets there, don't be surprised to see a bear market start. All right, so look how when we got to 611.85, what happened? Price dropped off really hard just now. Everybody was real bearish last week, facts. And I do want to remind people who are new, price has never been here in history, in the history of life. It's never been here. So yes, 7 months ago, I called this rejection on SPY. All right, here's another thing. SPY swept its previous all-time highs, and so did QQQ. It swept its previous all-time highs. Okay, those are very interesting things when it comes to price being bearish. All right. So here's the other thing. Let's keep it going. Let's talk about some other potential bearish signs. You see, this is the futures version of the S&P 500. So this is your SPY equivalent. On the futures version of S&P 500, we swept all-time highs right here and came down. But the NASDAQ did not sweep the all-time highs. So the QQQ has a futures version called NQ. NQ is what we're looking at. They did not sweep all-time highs. That's suspect. Why did the S&P 500 sweep all-time highs, but the NASDAQ did not sweep all-time highs? It fell short. That's called a divergence. When you notice that divergence and then we have aggressive moves slightly after that, usually it's going to continue and run out these lower targets, which is exactly what you've seen deliver. And that's something I talked about last week, which honestly, I called that happening from way before. Go back into previous classes once again. I talked to you guys about how the last bear market, I've been talking about this for weeks in a row. The last bear market started exactly like this. All of the stuff is in the Discord, exactly like this, where we fall short of running all-time highs on the NASDAQ, but the S&P 500 actually goes ahead and sweeps those all-time highs before coming down. And it looked exactly like this, where it looked strong at first. It looked real strong, and then it falls short. This is exactly how it looked like in 2022. So I say that to say this. Those setups are still very much valid. And I think we're at a point where we're about to determine, yo, are we about to head into like a bear market, or was this just a little, somewhat of a pullback correction type vibe? And it really depends on what price does pretty much right now. So look, this is consolidation. And anybody who's been following me for a while, I always talk to y'all about how price needs to leave consolidation with a fair value gap. So you see, we did not leave consolidation with a fair value gap under, but we have an emergency fair value gap right here. Why do I say emergency? Because typically I prefer the fair value gap when we leave consolidation to exist right around right here, anywhere in this general area, not this deeply into the range. But one thing I understand is that last week, price really had a super aggressive move with no pullbacks. So sometimes price basically makes the fair value gap inside of the range, and then we sweep, tap it, and go lower. And I'm trying to articulate that better. I feel like I said that a little bit confusing, but what I'm trying to say is, like, we went in one direction for so long that I don't expect it necessarily to keep going and then use it like that. When we go into one direction for so long, sometimes it'll sweep first, come back in, then go. That's the best way I could say it. And apologies if it's not like that clear. I'll try to find a better way to say that next time. But that's kind of like the setup I'm looking at right here. I see it happen on lower time frames all the time. But this fair value gap on the daily is ridiculously important. All right. And so you see, and the question, I know I'm missing some questions in the chat. I'm gonna do my best to get to those after. But I want y'all to notice this. So where is that? Okay, those is them lows from February 2nd that I talked about in my channel. And let me show y'all something in my channel right now while we talking about it. This is what I told you guys on Friday morning. So look. All right, look at Friday morning's thing. Look at Friday morning's analysis. Perfect. You can see like this, I think. It says the downside leg on this arrow will be expected next week. So Friday, when I said both of these arrows are equally probable to me, that's because I'm leaning bearish. So on Friday, I said I'm expecting price to run up into February 2nd lows. February 2nd lows. Notice I put the arrow right here, ever so slightly above February 2nd lows, and then we could come back down. So the rally that occurred on Friday is something that was very much expected. I expected the week to end right here because that's something I talked about the night before, the week ending right over here. And then I would expect the downside to occur in the following week. All right. And if you want to see the recording of me actually saying that Thursday night in my class, that is also in my channel right there. It's like a 30-second, it's a 28-second video of me saying, y'all, I think Friday we're gonna rally up into February 2nd lows or whatever. And then y'all seen how we went straight there and the day closed right there. All right, so now, once again, these is February 2nd lows, the yellow line, I'm about to delete it. This looks exactly like my arrow so far, but we need to actually, see price deliver. So what I want to, so notice this, we're in a daily bearish fair value gap right now. Very important area. I want to see the hourly follow through and get real bearish. The hourly right now it's okay, but we're going to see. We still need some more confirmation. I told my mentees before this class, shortly after open, like 6 something p.m., I said this may be the high that NASDAQ is going to put in before the next big drop. So far, we've been dropping. That's why I'm short NASDAQ right now. We'll see, where the play goes. I'm already gonna make money because I already got my stop in profit. But let's see how low can this potentially go. We're gonna have to find out. And what price? Where did I say consolidation tends to occur? Consolidation tends to occur between two valid PD arrays. So right now, why do you think we're consolidating? Because we're in between this very important bearish fair value gap and this very important bullish fair value gap. That's why we're consolidating right there. All right. And so for me, I told my mentees, I think it's a lot more confirmed that we're bearish for real if we could lose the blue area. But there's a very, very high chance that we could bounce out of this blue area right now. Very high chance. So I'm not like bearish on NASDAQ until I see us lose. I think if we lose this, it could get bad. I ain't gonna lie. I think it get pretty bad. So I really want to see if price can lose this 5-minute candle from 3:50 p.m. The same candle I talked about with you guys on Friday. If we could lose this, then I think NASDAQ get to hit to the downside. If we come back and start trading above the blue area on top, then I think NASDAQ is gonna make a deeper push. And right now, I would just aim for the daily fair value gap right here. I'm gonna keep it real light, real simple. Just aim for that right there. So the bullish plan is above this blue. I'll take it to this blue. All right, and the bearish plan is, let's go back to the 5-minute. I think once again, below the current fair value gap that we're trading inside of, but below that one, I think NASDAQ can get bearish, and we're gonna start making our way to running last week's lows. All right, and if we run last week's lows, by the way, here's why I have it going. And there's nothing wrong with saying price alerts below last week's lows either, by the way. First of all, I think we headed into a bear market if we do that. I'm gonna be real with you. I ain't gonna lie. like I'm just going to say that right now, bro. Like, I think if we do that, we go to bear. I really feel like that. I don't care what nobody say. Because, the only thing that should happen bullishly, the only thing is sweeping these lows to push up. That's the last bullish setup I have. After that, I don't see no bullish setup that should work out. And I think we're going to run all of these lows here. And so where I have price going under there, this is a next destination. Where's that right here? This daily bullish fair value, that's the next destination. Do I think it's going to bottom there? No, I don't think it's going to bottom right there. That's just a place we can get a reaction from into the next bearish P rate that'll take us lower. But yeah, I think it get bad. I ain't gonna lie. That's my analysis. I'll let y'all know if something changes, but that's what I felt like about NASDAQ. ES, which is the S&P 500, with them, I'm gonna kind of let NASDAQ tell me where they may go. For ES, I'm only bullish on ES if we invalidate these highs, but that's so far away. I don't like anything on ES for a bearish setup though. So if anything, somebody, like, people should be hyped. Like, I'm talking about bulls. The bullish people in the room should be excited because ES looks a lot more bullish than NASDAQ. I ain't gonna front. So for ES, here's what you don't want to see as a bullish person. As a bullish person, you don't want to see ES invalidate this bullish fair value gap. All right, if we invalidate this bullish fair value gap, that's not a good sign for ES. I think we're going to get much more bearish. You want to see price be really sensitive to this bullish fair value gap. You don't really want to see it come to the lowest part. You kind of want to see it like maintain somewhat of the upside before going higher. We already tapped into it. Now it's about what it's going to do with it. So ES and NASDAQ are on high watch. Bitcoin is on high watch. These things are in critical areas. All three of those tickers. The Dow, like, they gapped up right back into that 4-hour SIBI. That's interesting. This is the same 4-hour SIBI I talked about in class, the same daily BISI I talked about in class. And what did I say about where consolidation tends to occur? I'm showing y'all so many examples. Where does consolidation tend to occur? Bullish PD rate, bearish PD rate, they're both valid. That's why price is moving back and forth. And so sometimes it's just best to wait for price to pick a side. Usually I go to a higher time frame and determine direction first, so I know what side to pick. Like, so for example, I'm on the 4-hour. I might go to the weekly and say, where do I think the weekly is going? If I think the weekly is going to go lower, what I anticipate is that the 4-hour SIBI is going to beat the daily BISI. That's what I anticipate. So where do I think the weekly is going? With that being said, and let me just show you guys, by the way. This is a 4-hour SIBI reaction right there. Came down, made another one, reacting to it, and that's where we are. But where do I think the weekly is going when I look at it? When I look at the Dow, the weekly looks bearish to me. I think the weekly will attack these lows. So I do kind of anticipate the blue area winning the battle. But we'll see. We'll see. All right, and the Russell. We got the Russell right here, man. What is the Russell talking about? What was he saying? The Russell. What was I saying about the Russell? My fault. I make these watches. I made it like a couple days ago. I forgot what I was thinking here, but I'm trying to look at it with fresh eyes right now. I mean, the weekly on the Russell looks bearish to me as well. I would think the Russell's coming into the September lows. I think the monthly was what I like this. No, it was the weekly. It's a weekly. I like the weekly coming into September lows, but I need PD rates to support that bias. As long as the Russell stays respecting the lower half of this 4-hour red candle, I like it coming to weekly lows. Once again, there's nothing wrong with waiting to just for price to make a lower low, because I think if we run these lows, we're going to start attacking September. So you don't have to necessarily trade the retracement or nothing like that. You could just wait for price to like flip bearish and start attacking these lows. Then you could get it somewhere around here and take it through the lows, because I don't expect it to stop. I expect it to head to September. So once again, there's nothing wrong with just being a little patient in the market. CL. You see, this is this is literally last week's setup. I told y'all this in class, like literally last week. I said, yo, everybody, I want to see CL use the 4-hour SIBI to head to the yellow line. This was exactly what we highlighted. Got to the target, now we bouncing. But that bounce is interesting to me. I think CL may head higher. I'm bullish on CL, especially if we come back above this blue area. There's still a chance we could reject it again, so that's why I'm being cautious with y'all. But you know, but we did hit to it. We did hit a destination. I told y'all, like, I would love to see it run the yellow line. But first of all, look how choppily this move is moving. That's usually not a good sign. And usually when order flow flips back bullish, yo, the upside gonna look like that. So if we get order flow to flip bullish again, the upside is gonna look really aggressive. So you wanna, keep your eyes on it. Keep your eyes out for that on CL. This fair value gap's important. I think if we run these lows, we're gonna take everything on the downside. So if we run these lows, they just engineer liquidity based on the fact that we made a support level. They just made a support level. So if we get order flow to flip back bearish, I would expect us to attack that support level and head for these lows. So that's my CL setup. We got a bullish setup, we got a bearish setup. We should be able to make money regardless if you a CL trader. And we almost done. I'm just gonna do gold and then a couple words on SPOT. Can we out of there? All right, so gold. Gold. What was gold's plan? Gold's plan last week, everybody, was if we lose this 4-hour BISI, expect gold to run these lows. And so we lost the 4-hour BISI, used on the other side, ran those lows. Beautiful. Now we had this 4-hour SIBI hit, and I'm watching for, I want to see if bodies could hold this area. If gold invalidates this green candle, I'm bullish. So as long as gold holds below this green candle right here, I am bearish on gold. As long as gold holds below that green candle, I am bearish on gold, and I expect it to come into this gap down here on the 4-hour. All right. This is the old target that we had on the upside. Gold was smashing all our targets. We killed gold for real. So yeah, that's my gold expectation. QQQ is nothing really different than I said on NASDAQ and S&P. I already told you all about that on ES. Once again, when objectives are met, that's what causes retracement. So we filled the daily gap on SPY that we were targeting. The objective was met, it caused a retracement. But now we need to see like what's really the word, like what's really expected next in the market. I think that wick, I think these highs right here are really important as far as holding price bearish. I don't really want to see price come back above those highs, but it's a strong chance it could. Like if this was a chart debate, If this was a chart debate, the first place I would take SPY. Personally, I'd probably take it right here. And then watch PD raise around here to tell me if we're gonna run those highs. But I feel like we might push up first a little bit, but we'll see. We'll see. I think a lot will be determined based on how we trade overnight here on ES as well as NQ in the futures market, because obviously futures trades overnight. These just trade at 9:30 p.m. 9:30 a.m. And just a brief showing. Last thing I'll show really quick. I swear this will take like 2 minutes. Is let me show you Tesla, just to show you guys how our plan worked out on Tesla. We talked about Tesla using this blue area to head to the purple. You see how it really played out. Beautiful trade right there. We had I'm just putting out the notables from last week that we talked about for people who stayed late on the Zoom. Palantir, same thing. I said if Palantir loses 95, it's going to do the gap fill, which is the yellow line, fill the gap. Beautiful trade here as well. And then just two more that I liked. I'm just picking the ones I like the most because almost everything we talked about last week played out. Google was fire. We said use this 4-hour CIVI to take us much lower on Google. I gave you guys targets to the downside as well. And so this played the heck out. And then last but not least that I wanted to show is American Airlines, small account ticker. And we talked about American Airlines going lower here on the 4-hour. Where did it start? Tuesday, February. I don't know, my fault. But it went lower. I can't remember where we talked about it, but yeah, it went lower. So American Airlines did its thing as well. So that's for the small account people. And I don't really necessarily think these things are done like this is done to the downside, but I think we'll get a lot of information based on what NASDAQ and S&P do going forward. So, you know, I told you guys about the new week opening gap already, right? The gap we make when the week opens. We already filled that in. We already filled that in here. And so once again, just we're watching these two areas right now. Notice how price continues to consolidate. Keep your eyes on this going forward. And that's all I really have for y'all. So if you're watching this on YouTube, the links are in the description for the mentorship starting in April. It's a whole lot of value. It's been life-changing for a lot of people. I want to change your life too. And my free community link is in there. So if you can't get into the mentorship, it's cool. Tap in with us for free. It's a whole lot of free value. My Instagram is in the description. My email, my website, everything in there, yo. Just tap into the description box and subscribe to the channel, like this video. With that being said, that is all she wrote.